Joe, worst month of the year. Everybody knows that by now, I suppose. The question really is what happens now? You know, Wells Fargo's Chris Harvey, floor of S&P at 4,200. How do you see things as we close what was a pretty dismal month?
So as we approach the end of the month, you had some oversold conditions, in particular for bonds, and overbought conditions for crude oil. And that's been worked off over the last couple of days. So that's provided some relief for equities. I think now it is all about earnings, what the earnings will look like as they report here in the coming weeks. I believe that earnings will be strong. I still think that we will see the positive effect in this quarter of a strong consumer. Resiliency will prevail. I believe we will deteriorate in those earnings as we move forward into 2024. But the setup for the remainder of the year, if you have strong earnings, I believe is a positive one. And I still think the leadership, which has been in mega caps, will ultimately be where money managers not want to turn, but have to turn if they want to keep pace with a market that restores the prevailing trend of 2023. I don't see them turning anywhere else, Scott. They're not going to turn to healthcare, financials, energy, industrials to capture the return. They're going to have to own the mega caps.
All right, Brenda, it's good to see you here on this coast for a change. So welcome. Yields, earnings, two most important things undoubtedly for what happens next, correct?
I agree with Joe that earnings are going to be really important, and I think hopefully it'll bring a return back to fundamentals and looking what's happening in the world of corporate earnings, which I agree with Joe, I think they're going to be strong. And this, as a reminder, you know, this is going to be the first quarter of earnings growth that's being projected after several quarters of an earnings decline for the S&P.
As you talk, let's just show what the earnings growth estimates are, because you're right. But continue, you'll see, you know, growing by a smidge after these last quarters of declines.
So I think that's certainly an important factor. Also, we have energy, which should be having a much better earnings quarter this quarter, following the rise in prices that we've seen. But I think from a bigger picture perspective, we're really looking at an environment where sentiment changed materially from the beginning of the year until June, July timeframe, where I think things got too positive. But we've had this come back to reality check a little bit with an acknowledgement that the economy is still pretty strong. The Fed is likely going to stay higher for longer. But at the heart of it, I think, is that corporate earnings are still going to be pretty good. So I agree with Joe that we might see some softening next year, especially if energy prices stay where they are, and a lot of confusion over inflation and what that means if we start to see the energy flow through into the core inflation components. But outside of that, I think earnings are going to be pretty decent. And so that hopefully that'll be a catalyst here to get things moving in the right direction.
Jason Snipes, so, you know, I read the other day to our viewers what Bespoke was talking about, you know, September to forget for the last 4 years or so, but then the fourth quarter good over that same period of time. Now, I don't know if history is going to repeat itself, rhyme, or if things are different now because the yield question has brought a whole new variable into the conversation. And, you know, earnings, to the points that have already been made, are suggested to go higher starting now.
Yeah.
Better live up to the hype.
Right. No, absolutely. And I agree with a lot of what Joe and Brenda already said in terms of earnings expectations, and hopefully that'll ring true and come to fruition. But I'll turn to some of the inflation data that we got this morning. PCE core deflator was down, income was relatively in line, and spending also has come down. So these are positive catalyst, I think, for the market. Also, we got a surprise in Eurozone, right? Eurozone deflation, you know, so I think that also has been a positive, and I think that's part of what we've seen in these last 2 days, a little bit of a bump. But I do think earnings will ring true. We'll see in the next 2 weeks.